My name is Matt Blackman. I'm sitting here with Mr. Dan Zanger. Dan is the host of ChartPattern.com, and Dan has been rated by Bloomberg in the top 1 percentile of hedge fund managers in the U.S. with a 99 out of 99 score. Dan, what would you attribute your tremendous success over the last few years?
Well, obviously following the leaders in the market and having a lot of money on the leaders, and I'm looking for stocks that have great explosive earnings and explosive price movement on the explosive earnings. Stocks such as Taser or Google have been a couple of my big winners. Research in Motion, I've had a number of times that have been, very advantageous to have big moving stocks. So I'm looking to be selective in my selection of stocks. Very powerful earnings up 50, 60, 80%, if not more. Stocks like Google have earnings up 140%, 150%, Taser up 200%, 300%. These are stocks that aren't well known, and as institutions and traders and players come in to start buying the stock, this creates the buying pressure that pushes them up, and these are the stocks that I focus on. Older stocks, a Time Warner, a Cisco, a Microsoft. You can't give them away. Everybody owns them. Their story is played out. There's just they've saturated the market with their product. There's just no need to own them anymore. So I'm looking for basically relatively new companies that dominate their space, that are global players, niche players, that are changing the entire space of which they operate. And Taser, no one has a Taser gun other than the Taser company. Google is dominating the new ad space, powerful new ad space in the market today. Even Yahoo has to now play catch up to Google. So these are the companies that I'm focusing on a regular basis, and as they break out, I go 2-to-1 margin, and as the stock runs up, I start peeling back my margin and letting them run. So and I'm playing seasonalities, which are strong seasons, which are weak seasons, but basically focusing in on the leading stocks that make the big moves all the time.
That's great. Now, maybe just outline briefly for us what your biggest winner was in 2005, what caused you to trade it the way you did, and just give us the background and the lead up to it as well.
Well, certainly Google has been my big winner, and I've had an awful lot of my money on Google, an extraordinary amount of my money on Google. Basically, here's a company that's under-owned, but yet everybody uses Google for search. They're revolutionizing how they collect money for revenues. So much so other competitors are trying to play catch up. So that's what you want, is someone who's the dominant leader. Earnings are explosive. They're up they're up 100%, 120%, 140%. Revenues are up 90%, 95%, 110%. Here's a stock that's underknown. It's under-owned. Institutions have to come in and start buying it. And as they buy it, it fuels the stock price as the stock runs up. And again, CNBC and other stations do a great job of promoting the stock that it's overvalued. This brings in the short players. They just hear it that it's overvalued. So instead of them doing their homework, they'll just pile in and be one of the short suckers that's out there that helps fuel the stock as it races up. They do covering. So it's an ideal climate, this stock, to be a major winner, and has been a major winner for me. I've been in the stock on 3 big runs, and the money that I've made has just been gargantuan, to say the least. Really been huge.
So most of your money's been made. You're talking about now the money's been made in stocks going long. Now, when a stock market's getting toppy, how do you look for stocks to make money on the way down?
Well, I really don't make a whole lot of money shorting stocks. I found shorting stocks to be very tough. Remember, a stock can only go down 100%, but it can go up 200, 300, 400%. Stock like a Taser went up 5,000% in about 18 months. So the real big money is made on the upside. However, I've had some very good shorts in my career, most notably last January of 2005, this past January, where earnings were beginning to decelerate quite rapidly on eBay, and eBay had broken down from a high-level channel, and then the stock created what we call a bear flag after that, and I noticed that the stock was beginning to sell down the day of earnings, so I began to short the stock the day earnings were going to be posted. I wound up shorting 160,000 shares, and the stock gapped down after earnings because they missed earnings and projected weak earnings going forward. The stock gapped down some $20. For me, it was it was my single biggest one-day gain of $3.2 million on a single stock. I mean, I've had other days that have exceeded that, but for a one-day stock gain on one stock, it was pretty amazing. One of the very few times that I get excited in the market. That day, I got pretty excited, I'll tell you.
I can imagine there's not too many people that can say they've made $3.2 million in one stock in one day.
Yeah, and while I have a hedge fund, I own the majority of the fund, and most of my money is not in the fund. So the majority of the 160 gain, that 3.2, was my personal gain. So that was even more exciting. But I'm also very happy to make my investors a lot of money as well.
To find out more about Dan Zanger and his approach to trading, along with his insights, please click on the link below this video. Thank you.